Hi, everyone. If you're starting to question the system and want to protect what you have earned, you will want to download our free gold and silver protection guide. It's a clear, easy to follow resource that explains why gold and silver have stood the test of time and how they can help you build real financial security even as the dollar weakens. You'll learn about which metals to consider and the plan that best suits your needs, not Wall Street's. So click the link or scan the QR code to get started today. You're not going to regret it. Hi, this is Daniela Cambone for ITM Trading on the road here. We are at the great Rule Symposium on natural resource investing in Boca Raton, and I'm joined by Adrian Day of Adrian Day Asset Management. Adrian, always good to see you. Even better seeing you in beautiful locations like Boca Raton.
Well, good to see you, and thank you for having me, Daniela.
How have you been?
I've been wonderful. Well, I've been great. No problems.
Yeah?
Yeah.
Good. I'm happy to hear that. The economy, not so much. We're going to talk about that. Gold's having a great run.
Yep.
But let's start with the latest here. And I'm just going to quote this to make sure I get it right. Breaking news here regarding the BRICS. Obviously, the summit is happening at the same time as Rick will show.
You always give me breaking news after I've got off an airplane.
Well, President Trump saying any country aligning themselves with the anti-American policies of BRICS will be charged an additional 10% tariff. There will be no exceptions to this policy. Thank you for your attention to this matter. I guess the bigger question is, what's the concern here? Is it really a fear of de-dollarization over anti-American policy? What's your insight on it?
That's a really good question because, I mean, as you know, 6 months ago, President Trump was threatening 100% tariffs on BRIC nations. So this is quite a step down. But if it's 10% on top of other tariffs, that is a problem.
Additional 10% tariff.
Yeah, if it's additional, that's a problem. It's really interesting because a lot of, I think if I can step back, and I'm sorry, I think when you look at the whole sort of Trump economic and geopolitical policy, they're sort of all wrapped up together. I'm not sure that he's playing four-dimensional chess, but I do think there's a sort of grand strategy. But the problem is, and you read Mirren's paper on Mar-a-Lago Accords from last November, for example, that's just one thing. You listen to Steve Bannon, who's not in the administration, but he's on the inside, and the things he's saying, they all sort of fit together in many ways, but there's a lot of contradictions. So one of the things that they've talked about is having a bipolar world, or even a tripolar world, where the U.S. has its sphere of influence, and the U.S. is willing to defend and even help pay for the defense of some nations, and those nations who are friendly, and those nations will have ready access to the U.S. market, both for goods and for investment. And then there's other countries that can align themselves around China. They don't have air defense, you're on your own, and they don't have such easy access to our markets. And they've said, Trump hasn't said this, and I'm paraphrasing, of course, and that's fine. It's a multipolar world. But this sort of goes against that by saying, well, if you're not going to be with us, you're hostile. Mm-hmm. And that's not really what these policy papers have said. So there's a lot of confusion or contradictions, I think, in some of these policies. But I do think the anti-American, to answer your question, finally, I do think the anti-Americanism is the thing that sort of, as it were, sticks in Trump's gullet.
Your gut feeling, Adrian, and you always have such great insights, and I truly value your opinion.
Well, thank you.
Okay, because most people that I've had on the show have been quite critical of the tariffs, saying they're not going to work. History has proved they've always backfired. Do you feel that history will repeat, that the tariffs won't bring anything positive to the economy, or do you actually think it's part of a great master plan here?
Well, you can have a great master plan that isn't a good one. I'm not going to compare Trump with Hitler, but Hitler had the master plan. It wasn't a very good one, and I'm not comparing the two. Look, oh gosh, that's another huge question, because look, a tariff is a tax. And countries have to get their taxes from somewhere. And so I ask my friends, a tariff is economically negative. There is no question about that. It's an economic negative. But so is every other tax. And a country has to get that tax revenue from somewhere. And so is a tariff any worse than an income tax that taxes income, or taxes on investments that taxes investments, or taxes on savings that tax savings? Is it really any worse? It has economic consequences, but so do taxes on investments and taxes on savings. And you look at certain countries, admittedly very small countries, that are beacons, if you like, of openness and free enterprise, like Bermuda and Cayman and Bahamas. Where do they get all their revenue from? Bahamas. I lived in the Bahamas for a long time ago now, but they have no income tax, no estate tax, et cetera, et cetera, et cetera. All their money comes from either real estate tax or import duty. Mm-hmm. And import duty is the same, call it what you will. It's an import duty, an excise duty, a tariff. It's all taxing things that come into the country. So if you step back and say, is that really any worse than anything else? I think, again, the problem with the Trump plan is, first of all, as we know, tariffs cannot replace the income tax. There's no way. It might reduce it a little bit or make it less than it otherwise would be, but we're not going to, in the US, we're not going to replace the income tax with tariffs. And it's a shame we can't get rid of tax A and B and C and say, well, that's what the tariffs has done for you guys. We're charging other people, but we've got lower taxes here. I think the biggest problem to me with the tariff plan is the messaging. Are we taxing China because they're stealing our stuff and giving us fentanyl? Are we taxing Brazil because they're anti-American BRICS? Are we taxing German automobiles because they put too many restrictions on our automobiles? Right. I mean, there is no one sort of message, and I to be honest with you, I think that's bad. But anyway, to summarize, there's no question that tariffs are a negative. When I hear people who know better, not who should know better, but who do know better, like Jerome Powell, talk about he's waiting to see what the inflationary impacts of tariffs are, that's just absolute nonsense. We know theoretically and empirically that tariffs are not inflation. Tariffs are disinflationary. If anything, tariffs will lead the economy towards recession. Because you add money, you add a tariff to a good, and that reduces the demand.
Well, you're raising a really valid point. And why is Powell using that narrative if he knows better?
Well, why is he using that narrative? Well, I think Powell is definitely reluctant to cut rates too much at this point because he knows full well that inflation has not been conquered. He knows that. And again, we've talked about this before, but yes, inflation has come down along, but CPI, I shouldn't really call it inflation. As you know, inflation is the increase in credit and the increase in prices as a result of that increase in credit. But if we use inflation in a commonly accepted sense as the increase in prices, they've come down a lot since the COVID years, but that was exceptional. Prices today, CPI is still rising at a higher level than it was pre-COVID, and is still rising at a much higher level than his own arbitrary target of 2%. So he knows that inflation is not fully under control. So he is reluctant, shall we say, to cut rates too much. And with President Trump keep calling him a moron for not cutting rates, he wants to sort of, I think, as a human being, of some sort of, some dignity, he doesn't want to submit to what Trump's telling him to do.
Do you think how do you think this will play out? Your gut feeling. Do you think we'll get the rate cuts this year?
I think we'll get rate cuts this year, and if only because the dot plot last month, the Fed's dot plot where all of the members say what they think is going to happen. 2.5 rate cuts this year was the average prediction. So that's the Fed members themselves saying what they think is going to happen.
I just think this is an incredibly challenging time for investors because the data we're getting, CPI, jobs, is all very suspect. And so what is an investor supposed to do?
Yeah.
If we can't really trust that data?
No, absolutely. There's what's that saying? I think I think Powell used it himself, navigating navigating by the stars under cloudy skies. I mean, you're absolutely right. So much, which is a wonderful phrase. I'm sure he didn't make it up himself. But there's so much of it data is suspect. And I think it's been suspect for a while. Jobs is a classic. You look at the jobs creation numbers the last couple of months, they say, oh yeah, new jobs created the latest months and then the month before. Jobs created are better than estimates. Isn't this wonderful? Well, if you look at last month, we had whatever it was, I forget the number, sorry, 319,000 or something created. But they revised downwards the previous 2 months by almost as much as the increase in jobs. And then you look at, you drill down a bit between the difference between the ADP, the private sector job creation, and the Bureau of Labor Statistics numbers, and there's such a wide gap.
I want to transition now, talk about Big Beautiful Bill, projected to add $3 trillion within the next 10 years.
You're trying to get me into trouble with Trump supporters.
I'm just trying to bring the real story here because obviously the greats, Dalio, Jamie Dimon, sounding the alarm. They've been more vocal than ever. I mean, I know Dalio's pushing a new book, but he's really come out saying the economy is about to have a heart attack if we don't deal with the debt.
Yeah.
Do you agree with Dalio's warning that we are at the inflection point right now?
Right, and he's not the only one, as you mentioned. Jamie Dimon has said the same thing. A crisis didn't give a time frame, but yeah, we're getting very, very close. There's a point with a lot of things. Rick Rule, the host of his conference, Rick Rule likes to say just because it's inevitable doesn't mean it's imminent. And I would say the corollary to that is, yes, if something's inevitable, it can go along slowly deteriorating for a long time, but everybody thinks everything's hunky-dory. But you reach a point where it suddenly goes out of control. I think we're going to see that, by the way, with the use of the dollar as a reserve currency. I think we've gone at the beginning of this millennium, 1999, something like 78% of all foreign central bank reserves were in US dollar. And then 5 years ago, it was like a 65%. Now it's down to 47%.
Yeah.
And once you get up, that you reach a point where it falls off a cliff very rapidly. But I think we're going to get the same sort of thing with the debt. Already, as you know, as everybody knows, debt service in the U.S., the debt service is now the largest single item on the budget. It's bigger than defense, it's bigger than Social Security, it's bigger than Medicaid. So that's the imperative to bring rates down. I think that's the bigger imperative than the economy, frankly.
Let's wrap, obviously, on gold here. 28 new record highs this year alone. We know it's been an unprecedented year for gold, hitting close to 3,500 back in April. What's your sentiment here? Where do we go from here?
Well, I'm extremely bullish. I do think, one of the problems is, like for the last 18 months, I've been saying, well, we're overdue for a correction. We're overdue for a correction. And that was all true. We are overdue for a correction, and we just haven't had one. I mean, right now we've got a confluence of factors. We've got arguably perhaps some sort of peace in the Middle East, perhaps, and some of the other Arab countries wanting to join the Abraham Accords. That would be a very positive. That we don't seem to be getting anywhere in Ukraine, but certainly in the Middle East, that's calmed down. We didn't get to World War III after Trump dropped a bomb. We've got the prospect of a lot of new trade deals with different countries, including China and Korea and Japan, some pretty significant trading partners. The European Union says they're very, very close to a deal. So all of that would be positive. And then the intransigence of, I think that's the right word, that's the word I was searching for, Powell's intransigence on cutting rates, because he doesn't want to look like he's just doing it because Trump told him to. So all of this confluence of factors would perhaps be the perfect storm, the perfect environment for gold to have a pullback. Having said all that, I'm not worried about it at all. If gold were to pull back over the next month or 6 weeks, and let's not forget this is historically a very positive time for gold, so It would move counter to the seasonal factors. But if we have a pullback, I just think that would be an amazing time to buy gold. And I'll close with this.
Yes.
All of the reasons that people have been buying gold for the last 3 years, central banks wanting to diversify their assets away from the dollar in the face of dollar weaponization, Chinese non-official Chinese investors concerned about the devaluation of the yuan and the stability of their banking system buying gold, big wealthy investors in the Middle East and Asia particularly, but also in the US, people like Dalio and Jamie Dimon, people buying gold because they're concerned about the fiscal deficit. None of that has gone away. None of that's gone away. And Trump didn't cause any of those problems, but I think it's, at the very minimum, it's fair to say he hasn't diminished their impact.
Wow. Yeah.
So yeah, I mean, I think gold's going to be much higher. And we haven't even talked about North American investors buying gold for what I'll call the normal, traditional economic factors.
Do you think they've shown up?
They're beginning to, just slowly beginning to. But you look at the flows into the ETFs and the funds.
Yes,
they're only beginning to turn. You look at the gold stock ETFs. Look at the GDX, 3.3 billion.
Point. The inflows we've seen into the ETFs. What is that telling you, like via the physical gold buying?
Well, the inflows are very, very modest. I was just going to say it's 3.3 billion of outflows this year. And just in the last 4 weeks, it's something like 850.
Right.
Sorry, don't quote me on that. It's several hundred million of outflows just in the last month. GDXJ hasn't had any meaningful inflows since last August. So North American investors are hardly pouring their money into the sector.
Right.
But you do see some indicators, like the juniors are beginning to catch up with the seniors, silver's beginning to catch up with gold. You know, these are all indicators that investors, retail, whatever you want to call it, is beginning to come back. But I think I think that it's right at the incipient phase of that bull market.
I always appreciate your insights.
Well, thank you.
I truly do. It's always a great conversation.
Well, thank you. I appreciate it.
Come back soon.
Whenever I'm invited.
Adrian Day Asset Management. We'll have more great content. We are just kicking off this incredible show. One of the best, right?
Yeah. Oh, it's one of the best. No question.
Rick Rule's show. We'll have more great content coming your way. So be sure to stay tuned to the Daniela Cambone show here on ITM Trading. Stay tuned.